or the ZiG currency as we call it, strengthened 4% to 26.90 ZiGs per dollar, and that is according to data from the central bank. Now, the move extended Monday's gains, the first since mid-October, and the ZiG remained in that 35 to 40 range on the unofficial market. Now, economic analysts say that the currency is benefiting from tighter monetary conditions engineered by the central bank, which of course devalued the unit in late September. It also raised interest rates to 35% from 20% and increased reserve requirements in the country. Now, the ZiG is Zimbabwe's sixth attempt in 15 years to stand up a stable local currency to replace the dollar as its main unit of exchange. Now, earlier, development economist Dr. Prosper Chitambara gave his views on what has fueled the advancement of the ZiG and what measures the government can adopt in order to support the currency.
Well, I think it's being fueled by the tightening of the liquidity situation that we are seeing, especially from a monetary policy stance. The central bank has increased its bank policy rate from about 20% to about 35%. And over and above that, the central bank has also increased the statutory reserve requirements. So those two key measures have wiped off a lot of liquidity from the markets. So that has had some stabilizing effect, in my view, on the exchange rate. But whether or not that's going to be sustainable, I think time will tell, because there's a lot of pressure, especially on the fiscal policy front, given that we've just entered the onset of the agricultural season, the 2024-2025 agricultural season, and there's a lot of government spending towards supporting the farmers. So that could result in an increase in liquidity again, thereby undoing some of the gains that we have seen in the last week. The biggest fundamental is production. I think we need to work on ensuring that, number one, our economy is growing fast enough and in a more sustained manner. This year, the economy was largely affected by the drought, which resulted in a massive decrease in production across all sectors of our economy, largely, of course, agriculture. So we are hoping that once we are able to get the economy on a more stable and sustainable footing in terms of production, especially within agriculture. But of course, agriculture has been affected in the past, has been affected by climate-induced shocks. So there's need to climate-proof the agricultural sector. That will also have a positive impact on the second fundamental, which is our reserve position. So we need to increase our reserves to at least 3 months import cover, which is equivalent to almost about $3 billion US dollars. Currently, we only have about 250 million US dollars worth of reserves, and that's inadequate, in my view, to provide sufficient cover and stability in terms of the exchange rate, and also ultimately in terms of our macroeconomics. So that's the second fundamental, our reserves. Then number three, we need to ensure a low and stable inflationary environment. I think for me that's key, because inflation erodes confidence in a currency. Well, I think it's about creating a strong demand for the ZiG by, for example, allowing certain goods and services to be sold in the ZiG, like fuel. Currently, fuel is being sold exclusively in the United States dollars. So obviously that has created a very strong demand for the USD. But if we have more goods and services being sold both in ZiG, partly in ZiG and partly in USD, especially fuel. I think that will go a long way in terms of sustaining a very strong demand for the ZiG. And also, I'm sure they'll try to make sure that a lot of our taxes, especially the local taxes, are actually payable in the ZiG.